Before we jump into the video, please note that I may earn a referral fee from the services and companies I feature, but rest assured, there's no extra cost to you. I chose them because they're the best in the industry and you're safe with them. Busy is a professional formation service to file your LLC. It's an amazing company that will guide you through creating your LLC. They even have a service where they will file your LLC for you without you going through any hassle. Don't forget to check out the link and full review of Busy in description down below.
Ever pondered how much you need to invest to live off dividends? Well, you're not alone. Welcome to the intriguing world of dividends. Dividends, in simple terms, are payments made by corporations to their shareholders, usually in the form of cash or additional shares. They are a portion of the company's earnings, distributed as a token of appreciation for the investor's trust. Investing, however, is not just about receiving dividends. It's about having a well-thought-out strategy, a game plan, if you will. And dividends can play a crucial role in that strategy, serving as a consistent source of passive income. Now imagine a life where your investments work for you, where you're not trading time for money, but letting your money do the heavy lifting. Picture a life funded by dividends, where financial freedom is not just a dream, but a reality. Ready to unravel the mystery of living off dividends? Buckle up. To understand dividends, we first need to grasp the fundamentals of investing. So what is investing? Picture it as planting a seed today, nurturing it, and then watching it grow into a tree over time. The seed is your initial investment. The nurturing involves your time, effort, or additional capital, and the tree is your return on investment. Investing revolves primarily around three main vehicles: stocks, bonds, and mutual funds. Stocks represent ownership in a company. When you buy a stock, you're buying a piece of that company, becoming a shareholder. If the company does well, so do you. If it falters, your investment may decrease in value. Bonds are essentially loans you give to a company or government entity. In return, they agree to pay you back the principal amount plus interest after a certain period. It's a safer bet than stocks, but the potential returns are also generally lower. Mutual funds are a collection of stocks, bonds, or other assets managed by a professional fund manager. When you invest in a mutual fund, your money is pooled with other investors' money to buy a diverse range of assets. It's a way to spread your risk and potentially benefit from different sectors or markets. Now, how do you start investing? First, you need to decide what you want to invest in. This requires research and understanding of your risk tolerance. Once you've made your choice, you need to open an investment account, which can often be done online. After funding your account, you're ready to make a purchase. It's like online shopping, but instead of buying shoes or gadgets, you're buying pieces of companies, loans, or a mix of assets. Remember, investing isn't a get-rich-quick scheme. It's a long-term commitment. Patience, discipline, and informed decision-making are key. It's about growing your wealth gradually and securing your financial future. Now that we've covered the basics, let's delve into the dividends. So, what exactly are dividends and how do they work? Well, imagine a company as a fruit tree. The tree grows, and as it does, it starts producing fruits. The company, like the tree, grows and generates profits. The fruits here represent the dividends, a share of the profits that the company distributes to its shareholders. Now let's delve a little deeper into the process. A company earns profit, and it has two main options. It can either reinvest these profits back into the business for growth and expansion, a process known as retaining earnings, or it can distribute a portion of these earnings to its shareholders in the form of dividends. The decision to pay dividends, the amount, and the frequency rests with the company's board of directors. Typically, dividends are paid out on a regular basis, most often quarterly, semi-annually, or annually. It's important to note, though, that not all companies pay dividends. Some prefer to reinvest all their profits back into the business, especially those in growth or startup phases. So, how does a shareholder receive these dividends? It's quite straightforward. Once a company declares a dividend, it sets a record date. Only shareholders who own the company's shares on this record date are eligible for the dividend payout. The dividends are then paid per share. So the more shares you own, the higher your dividend payout. But here's the intriguing part. Dividends can be reinvested to purchase more shares of the company, a process known as dividend reinvestment. This allows your investment to grow exponentially over time, as you earn dividends not only on your original investment, but also on any shares bought with reinvested dividends. So that's the dividend process in a nutshell. It's a way for companies to share their success with their shareholders and for investors to generate potentially significant income over time. Remember, dividends can be a reliable source of income if managed wisely. So the million-dollar question is, how much do you need to invest to live off dividends? Well, the answer is not as straightforward as you might think. It's not a simple case of plugging in a few numbers and voila, you have your answer. It's more complex than that. It involves understanding some key factors such as dividend yield, your desired annual income, and the importance of diversification. Let's start with dividend yield. This is the annual dividend payment divided by the market price of the stock. It's usually expressed as a percentage. For example, if a company pays an annual dividend of $2 per share and the stock's market price is $40, the dividend yield is 5%. So, if you desire a high income from dividends, you would generally look for companies with high dividend yields. Next, consider your desired annual income. How much money do you want to make each year from dividends? This will largely determine how much you need to invest. The higher your desired income, the more you need to invest. And remember, your investments should be able to cover your living expenses and also keep up with inflation. Finally, let's talk about diversification. This is the practice of spreading your investments across different sectors, industries, and geographic regions. It's an effective way to manage risk. If you put all your eggs in one basket, you expose yourself to a high level of risk. But if you spread your investments, you can reduce that risk. To live off dividends, you need to balance these factors: high dividend yield, sufficient annual income, and a diversified portfolio. It's a delicate balancing act, but with careful planning and strategic investing, it's certainly achievable. Now here's the catch. There's no one-size-fits-all answer to how much you should invest to live off dividends. It depends on your specific circumstances, your financial goals, and your risk tolerance. It's a personal decision that requires careful thought and planning. The amount to invest depends on your financial goals and risk tolerance. Before we conclude, let's recap the key points. We've journeyed today through the intriguing world of dividends, an adventure filled with potential and promise. Financial success, however, is not a matter of luck, but one of understanding and strategy. We started by grounding ourselves in the basics of investing. We learned that investing is not just about stashing money away, but rather, it's about planting seeds and nurturing them to grow. It's about understanding the market, assessing risks, and making informed decisions. Then, we delved into the dividend process. We discovered that dividends are payments made by a corporation to its shareholders, usually in the form of cash or additional shares. These payments are a portion of the corporation's earnings and are a way for investors to share in the company's success. We also learned that not all companies offer dividends. Those that do are often mature, profitable companies with a history of stable earnings. Dividends can provide a steady income stream, making them particularly attractive to investors seeking a passive income. Our journey led us to the crucial question: how much do you need to invest to live off dividends? The answer, as we found, is not straightforward. It depends on several factors, including your lifestyle, your expenses, your investment strategy, and the dividend yield of your chosen investments. We learned that to live off dividends, one needs a substantial investment portfolio. The exact amount varies, but it's clear that the more you invest, the more you can potentially earn in dividends. As we wrap up, let's not forget that investing is not a get-rich-quick scheme. It requires careful planning, strategic thinking, and above all, patience. It's about playing the long game, weathering the storms, and reaping the rewards over time. Investing in dividends can be a path to financial freedom. But remember, it requires careful planning, patience, and diligence. Happy investing!